mentorship programs are so useful today because the information is out there. You don't need to buy a course. Nobody needs to buy a course. You can just Google it and you can get all your answers solved. The problem is there's too much information and you need some way to kind of structure that, to put it into a way that's useful and something that puts you out into the field. Because especially when it comes to real estate, you're not going to learn it by watching YouTube videos, reading a book or anything like that. You have to do it. And it's so easy to do.
Welcome, everyone, to the Casandra Properties podcast. We've got another treat for you today. Not only are we joined by the lovely Rebecca, who everyone seems to just not be able to get enough of. We're also joined by Gabe Petersen, a mobile home and RV investor based out of Seattle. And he is the host of the Real Estate Investing Club. How are we doing, Gabe?
I'm doing great, James. How are you?
I'm doing great. Thanks for joining us today.
Thanks for having me on.
So, you've got a lot going on. I have to say, you've got a pretty slick site, and we'll get into that. But one thing that jumped out at me when we were doing our research is this isn't what you always did, and you reference a period of time when you worked for the man. When I graduated back in when was that? 2009.
I didn't know what I was doing. I graduated with a degree in philosophy, thinking I was going to go become a lawyer. I followed some lawyers. I shouted them. I was like, I do not want to be a lawyer. So I graduated and I didn't know what I was going to do. A friend of mine he got a job with Accenture. So I said, consulting sounds great. So I went and I worked the 9-to-5 with a consulting company out here in Washington. Worked at Microsoft, T-Mobile, big guys. Didn't like the job. Didn't really like, the commute. Really didn't jive with me. So I was always looking for a way out. Like I knew I wanted to do something myself. I didn't know what it was going to be. I tried a few different businesses before this in e-commerce and digital marketing, and then ended up landing in real estate. My first flip was 7 years ago, but I did this full time for 2 or 3 years now.
So what type of consulting were you doing?
Business analysis, process improvement, and project management.
And it just wasn't cutting the cake for you, huh?
Yeah, there was just not enough self-direction. I'm sure anybody who has experience in a corporation, that you're just kind of feel like you're a cog in the wheel. The one thing that kept me there was the team. I loved my team that I was working with, but the work wasn't really inspiring to me. And it was like a 45-minute commute each way. And I just, Seattle winters can be really long. And so you leave when it's dark out, you come home when it's dark out. And it was just, I couldn't take it.
Well, Becca can talk to you about winters that she's not a fan
of. Oh, yes. That is very true. I could go on and on.
Rebecca is somehow based up in Vermont and she hates the cold weather and she hates snow.
That's the wrong state for that.
Tell me about it.
She tends to be turned around and backwards, but we're working to get her focused and on track. Right, Reeves?
Thank you.
So you've got quite a lot going on here. So to be clear, on your site, you're not brokering deals, correct? You're not acting as a real estate broker, or are you?
No, we are not brokers, but we market nationally for mobile home and RV parks, and so we wholesale deals. We'll assign contracts. But we do not list properties on the MLS.
So I'm fascinated with RV park deals and mobile home deals here in New York. We have really, really tough laws with tenancy. And legislatively, something Rebecca and I work on quite a bit.
And property taxes.
Yeah, property taxes, all the good stuff. Our RPO program, real estate portfolio optimization, where we take a look and analyze all the traditional metrics, of course, that go into real estate investing. But we have a very close eye on legislative threats. That has, over the years, kind of made its way up the chain. And now any SWOT analysis that we do, that's up at the top. That's even ahead of, believe it or not, interest rates and inventory levels. It's become so challenging with the legislative changes that we've seen over the last 10 years or so,
Man, I'd be interested to know kind of the results of that. Like which states are coming out ahead, which ones are falling behind. I know Seattle is not it's not faring well when it comes to landlord tenant laws, or at least it's faring that direction. But I'm curious to know about New York.
Yeah, so all well-intended stuff, right?
Mhm.
But what happens is the legislation doesn't always translate to what's happening to boots on the ground.
Yep.
And you end up taking the good players, the good actors in the industry, and they start to divest from it because it becomes so difficult to stay in compliance on all of the different benchmarks that we've taken our hands off. And a lot of the multifamily investors here in New York have begun to change the model, where in the past it's just been trading bricks for bricks, 1031 out of one, you back it to another. And they've started to diversify quite a bit. The manufacturing market up here, M land and industrial land, has really taken off. And you're seeing a lot of the traditional investors that had only played in the multifamily space start to divest. So I thought it would be a neat idea if you could walk us through a typical mobile home park. What are you guys looking for? What kind of cap rates do they trade for? What type of financing is available? Where do you source your capital? Kind of the whole thing, if you'd run it down for us.
Yeah, for sure. So I'm just, okay. You asked a few questions in there. So I'm going to start from the top. What to look for when you're buying a mobile home RV park, or really what not to look for. So the things you want to stay away from, it's pretty typical, but you want city utilities. You do not want septic. You do not want well. With that said, we're actually, today is the final day, or tomorrow is the final day of due diligence for a park that we're closing out in Moses Lake. It's on well, it's on septic, so it doesn't kill the deal. It's just not something that you want. Obviously, you want city water, city sewer. Outside of that, mobile home and RV parks can really run the gamut of quality, of location. There's a lot of different things that we look for. When it comes to cap rates, generally, so we have been offering between a 9 and 12. We're a little more on the aggressive side when it comes to cap rates, but cap rates have been being compressed, I've noticed. And most of our offers, the seller will say, hey, we just talked to somebody, they offered us a 6 cap. We're not even considering your offer. So it's our de facto what we offer on 9 to 12 is not working out. So it is going down a little bit more. Let's see ask some more specific questions. So
Sure.
prime it up.
So before I move on to some more questions about the mobile homes, and I apologize for getting ahead of myself there. As the conversation evolves, you'll recognize I'm all over the place because I'm excited about this. So 9 to 12%, those are really healthy rates of return.
Yeah.
Why do you think, and for the audience, for those of you who don't understand cap rates, essentially what he's saying between a 9 and a 12% cap rate means that it's the rate of the rate of return of the capital you put into the deal, assuming that you paid cash for it. So if you bought a piece of property for $100,000 and you were netting out 10%, that'd be a 10 cap, right? In 10 years, you'd have that money back. If it's a 12% rate of return, you'd have your money back in 8 years, and so on. So it's basically, if you wrote a check, instead of letting the money sit in the bank or go into an alternate investment, how long would it take for you to get the money back? Now, when he says that rates are dropping down into the 6 and 7%, that's shocking to me, because just a few years ago, we were trading, single tenant assets like Walgreens leases for high 5s, low 6s. And then, of course, that dropped, and those were way down into the 4s. But for the benefit of the audience, if you can imagine having a tenant like a Walgreens deal, a land lease, where they're responsible for all of the maintenance of the building, you don't have to run around chasing 5, 10, 50, 100 different tenants. It's a credit tenant, which means that they're bankable, they're financeable. Basically, you sit back and collect your check. So in those instances, you'll see the cap rate come down because the level of work that goes into the deal comes down. Typically, the higher rates require a little bit more elbow grease. The more energy and effort you put into it, a little bit more of that sweat equity is going to translate into a higher return. So why do you think that the rates are coming down so much? And are they coming down in all asset classes by you, or is it just mobile homes?
Honestly, I think mobile homes are just becoming more popular, and so there's more people willing to pay a higher, a higher amount. And so the 9 to 12 band, I kind of lump mobile home and RV parks into one bucket, but really they trade at different cap rates. Mobile home parks, we usually go 9 and 10, and the RV park is 10 to 12. RV parks, obviously, because it takes more effort. We really try to run RV parks as long-term stays, but you still do have the people who will be there for weekend, a week, a month, something like that. So the reason that it trades higher, obviously, is takes more effort. It's more of a business than it is an investment. And then again, obviously, in the cities, here in Seattle, you cannot find a 9 to 12 anywhere. That'd be a killer deal. So if you're in, a great metro that has appreciation, you're not going to get those cap rates. But if you're outside in the suburbs, yeah, you will.
So if in the RV side, you're getting down to tenancies that are that limited, meaning that they're in and out intermittently, how do you secure financing for a transaction like that? Is it standard metrics?
Seller financing. That's the answer.
Okay.
So, we really press hard on seller financing. Whenever we make an offer, we always do 2 offers. We do 1 cash, 1 seller. Seller financing is generally going to be, we're going to be very generous with that because we don't want to have to go to a bank, especially for most of the parks that we look at are semi-distressed, meaning that they have low occupancy. Maybe they have a few things that need to be done. And so a bank is not going to look favorably on that. And so we really push seller financing, usually 20% higher or up to 20% higher on the offer price for seller versus cash.
Wow. And what type of terms do the sellers give you?
So our standard is a 10-year balloon. We could do interest only or interest and principal. And then we start out at 3.25 for interest rate and, go around from there.
Okay. So you're putting a package together. You're looking at mobile in the 9 to 10, RV in the 10 to 12. Where are you sourcing capital for the initial acquisition? I noticed that you have a portal on your site for investing. Are you doing, single investment opportunities in a deal? Do you have like a Reg D offering and it's a continuing fund that rolls these things forward? If someone wanted to invest with you, how would we go about doing that?
Yeah, so far we've been able to do it all. There's 3 partners, and we've been able to do it all with our own cash because we negotiate a low down payment for seller financing. But going forward, when we get into bigger deals, we're going to have to start raising funds, and we haven't crossed that bridge yet. So once I get there, I'll let you know.
Good stuff. So you're self-financing the initial capital for the down payment. The seller's holding the note. Okay, let's talk about title. What does title work look like for a transaction like this?
From my perspective, it's the same as anything else. We go through a title company. They handle it. Everything generally looks good. So when you buy a mobile home park or an RV park, there is a chance that the units within the park, so the mobile homes, are park owned. That is not good. You do not want to own the park or own the homes because yes, you can get more when it comes to rent. However, you have to maintain those, and that is just time for headache. So it's not worth it. So like this park that we just purchased up here in George, Washington, it had 4 park-owned homes. We did not want them. So we went through the process of selling them to the tenants. However, it turned out that they did not have titles. The current owner did not have the title. And so we had to go through the process of transferring titles and getting the original owner to sign over the title for the mobile home parks or the mobile home units. So it was kind of a nightmare, but it's just work.
So, and I'm sorry, Becca, for dominating the conversation. We're going to get into
You're fine.
the mentorship program that Gabe offers, which Becca is our Wendy from Billions. I like to call her our Wendy. So we'll get into that. But so you're buying the dirt, basically. The individuals own the mobile home, and they're coming and they're renting the plot from you, I guess. Is that it?
Yeah. So the value, I mean, from like the societal perspective, the value that you're offering is you're doing the infrastructure, so the utilities, and then you're creating the community. So you create a nice community, and then you maintain everything that is required for the mobile homes to operate correctly within that community.
Okay. So are there, amenities? Do you offer that, do you look for that sort of stuff in the parks? Are there, playgrounds, or I don't even know where to begin.
That's a good point. Yeah.
Yeah. Some parks do. So one park, this park that we're working on in out here in Eastern Washington, it used to be a KOA, a Campgrounds of America.
Yep.
And so it has, it has kind of like a community center, I guess is what you'd call it. And then like a playground. So some of them do. We don't want to have the playground on the site just because of liability issues. So we're going to be taking that down. But some parks do. We were working on a park out in on the coast. It was 121 sites, and it had a pool, it had a motel, it had all the stuff, including the mobile home park. And so it really depends on the park. I feel like a lot of these parks were just kind of hobbled together. And so over years, they started adding things to them, and it came up to be what it is. So some parks will have amenities, most of them won't. They'll just be the park itself.
Okay.
Interesting.
And I'm sorry, I'm going to keep hammering you on this because, again, it's fascinating to me, and it's a marketplace that we wanted to explore. And we're the kinds of people, by the way, that are ruining your cap rates. So sorry about that.
Nice. Thanks for that.
We start jumping into these other markets, and we have an impact on the rates, right? So the tenant moves in. Are they signing a traditional lease?
Not a traditional lease, but they are signing a lease. Yeah, there is a mobile home tenancy lease, essentially that they're leasing the lot from us. So we have them sign two things: the lease and then the park rules. We have park rules to maintain the aesthetic of the park, to make it a nice community. Things like they can't have vehicles that are not running on the property. They have to maintain the grounds that they're of their site. Things like that.
Okay, and what happens now? Mr. and Mrs. Smith sign a lease, which I guess maybe is an occupancy agreement or a hybrid thereof.
Mm-hmm.
They come in, they have their mobile home here. Are these 1-year deals, 5-year leases? How long do they typically run?
So we do both 1 year and month to month. It just kind of depends on the situation. A lot of people appreciate the month to month, just based on who they are and what they want. And we're fine with that. People tend to, or we see long-term stays, long-term tenancy. And so we're not really afraid of high turnover. When it comes to RVs, that's automatically going to be a month to month lease. And there is going to be higher turnover there.
Okay. And do you ever have a situation where Mr. and Mrs. Smith abandon the mobile home?
Yes. Abandoned. Well, I guess not really abandoned, but yeah, we do have situations where people leave, but they tend to leave it in the name of somebody else. And so we just had somebody leave our park, but their cousin came and they said that they'd like to rent their space to the cousin. We said, that's fine, go ahead. So we haven't had a lot of cases where people just leave their unit on our park or in our park. But I've definitely heard that happening. People just leave, mostly because they're tired. They don't want to move the unit. And yeah, they just leave it in the park.
And last question on this: what do your occupancy rates look like in a typical facility?
So we have 3. That's right now we have 3 parks. I don't want to make us sound like we're some giant hedge fund or something. But we're doing really good. I mean, occupancy is great. We've been doing this for a year now, and we haven't seen any dip in occupancy. Even when we buy the parks themselves, people, we haven't raised rents too much, but we haven't seen any pushback from anything, and so people are generally amenable to change of ownership and to slight raises in rents if it merits it.
Okay.
That's great.
Well, it's a nice education, a 20-minute Cliff Notes, folks, on those of you who are interested in the mobile home and the RV investment opportunities. We've actually had quite a bit of discussion or chatter within our groups, folks, again, because there's a little bit of legislative fatigue, and people are looking for different opportunities. And that's something that's come up in our business clubs and in our networking events. Exploring those opportunities is just an alternative. So appreciate that. And I think the audience will appreciate all of that insight, and best of luck with it.
Yeah, it was very helpful.
Yeah,
So,
yeah, absolutely.
The other thing that jumped out at me, and now we can bring in the lovely Rebecca into the discussion. So we found a tremendous synergy between our agents, our staff, and coaching and personal growth stuff, right? So this is something that I've shared on the channel quite a bit. I was the knucklehead who, was not really pro this type of stuff. And as I started to get into it, it's had such an unbelievable, profound impact on everything that
Absolutely.
I do, personal and business. And Rebecca has that personality where we're making changes here in the company, where one of the things we're going to be offering in addition to our real estate institute is going to be a full-time coach that's going to be on the team. So I noticed on your site that you've got quite a bit of, information about not just the deals and not just the real estate side of stuff, but personal growth and spiritual growth and health and happiness and all the other things that we tend to sideline as serial entrepreneurs, where we're going so fast. We don't spend enough time on that. So I thought it'd be interesting if you and Becca could talk a little bit about how you got into that and the correlation that you see in the business. If there is a correlation, could be just a coincidence, and take it from there. So Reeves, if you want to jump in on this, I thought it would be productive for the audience to hear a different perspective.
Yeah, absolutely. So when I was looking at your website, I noticed you had a little tab on the mentorship. And it looks like you offer one-on-one, and then do you offer group as well? Or is it just the one-on-one mentorship?
Yeah, so that is actually a recent development. I was suggested to do that, and I'm actually pretty excited about it. It will be group. The group I'm still trying to. Before we really launch it, I'm taking people's names and I'm getting interest. But before we launch it, I want to make sure that the program is going to get people results and not just be a place where they can go and share stories. But yeah, so that I've been in. I've taken courses with mentors before, and I feel like having somebody who's done it before and who can kind of show you a road to go down is. It's one of the most important things in my journey to get where I am. And the goal is just to kind of give that back to the next person and help them, get to where they want to be.
That's great. So is it something that you, after, speaking to other mentors, thought I'd love to do this for other people? Or did somebody say, hey, you've got a great personality for this. This is something you should do. You've got great information. How did it all come about?
Yeah, a little bit of both. I've had people say that, you should do this. It would be, it would work with your personality and you'd be good at it. And also I really like talking about real estate. I really like helping people, make it in it, because when I first started, it was way overwhelming, like way overwhelming. And I didn't know what I was doing. And I was just throwing things on the wall, seeing if they stuck. And, looking back, I'm glad I went through that. I learned a lot of lessons, but I feel like that process could have been cut short or shortened a little bit if I had somebody from the beginning to kind of say, hey man, this is what you're doing. You're doing great. Especially when you get those no's, if you're on cold calls and people are like, you just get no after no after no. If somebody was just there to say, dude, you're doing great, just keep going. Eventually something's going to work out. You're doing the right thing, blah, blah, blah. So I forget what your original question was, but that was my answer.
No, that was good. That was good. So you answered it. So let's say I want to reach out and do the one-on-one with you. What can I expect? Like, where are you going to start from the very beginning, kind of the nitty gritty, or will you specialize it specifically for something that I'm working on in real estate? What can people expect from you?
Yeah, so the one-on-one is really going to be based on your goals, because everybody's different and everybody is in a different situation. If you have $1 million in the bank, then it's going to be a lot different than if you have $0. The process and what you're going to be going after is different. Also, the type of asset that you want to take down is going to be different. So it's really going to be based on what your goals are. I got started in single family and multifamily, and so I know how to go down that path. And then obviously I'm doing mobile home and RV parks now, so I know how to go down that path. So it's really going to be based on what you want and what your goals are.
That's great. And will you have specific topics that you will go over in like group mentoring? Yeah.
So it's broken down into, it comes with a course. So I created a course around all this. And we go into, sorry, I gotta make sure that I remember the different modules. So it starts out with how to find the deal, how to finance the deal, how to add value to that deal, and then how to exit. So that's basically how it's broken, what it's broken into, the different segments. And in each one of those, we go into details of how to do that.
Wow, that's fantastic.
It's so neat that we're in a world where you can do this, right? Where you can collaborate and you can empower and you can share and you can educate in such a profound way through the digital tools that are available to us today. When I started a long time ago, I'm getting old. Oh my gosh. When I started almost 25 years ago, it was back then we had the big MLS books. It was boom. Here's the book. Here's some leads. Start calling. And that's how you learned. You started calling, and you took a course through the state. You took your test through the city. It had nothing to do with real estate, like in practice, right? It was all the regulations and the rules and all that jazz, but it didn't teach you anything about how to actually negotiate a deal and how to actually pull it together. So to be able to impart this knowledge and to connect to people as we're connecting now or in person through the assets in the digital toolbox, it's just a remarkable time.
Yep.
I was watching an interview with Elon Musk, and they were talking to him about SpaceX. And they said, you don't have any formal background with rockets and this type of industry. What motivated you and how did you learn, to how do you run a company that's going to be launching rockets up into space? And he said, I'm self-taught. And the guy laughed, the interviewer. And he's like, I'm serious. There's nothing that you can't access today at your fingertips with a few clicks. Yep. Literally, it's all so available to us. Yep. There is such an amazing opportunity for us to be able to really become experts in different fields. Of course, you've got to put the energy in. Of course, you've got to put the effort in. You've got to be vigilant. You've got to be tenacious. But that goes without saying. If you're willing to make that commitment through YouTube and through podcasts and through books, you really can learn kind of anything.
Yep. Yeah. And that's why I feel, it's another reason why I think mentorships and especially mentorship programs are so useful today, because the information is out there. You don't need to buy a course. Nobody needs to buy a course. You can just Google it and you can get all your answers solved. The problem is there's too much information, and you need some way to kind of structure that, to put it into a way that's useful. and something that puts you out into the field. Because especially when it comes to real estate, you're not going to learn it by watching YouTube videos, reading a book, or anything like that. You have to do it, and it's so easy to do. You just do one deal, and you've got the experience. I mean, all you have to do is just buy a house. That is the essence of real estate, and so you just need to get the actual action done. I forget where I was going with that again. I don't know. It's so close to, to the holidays. My memory is just.
We're all a little fried.
Oh gosh. No, I think it's funny because I think I saw that same interview, or at least a piece of it, James. But it's right. You can find anything digitally that you want, but I think it's interesting, Gabe, and tell me if you find this to be true too. So you can find all this information and you can, read and educate, but there's something about having a support system in really everything we do in life. But, when you're working on your career, just even to have somebody to come alongside you and say, you're doing the right thing. You've got this. Like you said, with the cold calling, just keep at it. And sometimes I think we take for granted how profound just having someone to stand beside you and encourage you really is. Oh
yeah, no, absolutely. Just knowing that you're not doing something alone is good enough in my opinion. But having somebody to kind of guide you is so crucial, especially for something as complicated as real estate.
Absolutely.
So I wanted to talk a little bit about your YouTube channel, which is killer, by the way. Folks, if you have an opportunity, I strongly suggest you check it out. Correct me if I've got this wrong, but it's actually the Real Estate Investing Club, correct? That's what we put into YouTube to find you?
Yep. And that'll take up the YouTube. So there is a second podcast I got started down. I created the Real Estate Investing Club. I just had a blast doing it. People were like calling and asking me to be on their podcast who had no real estate experience. So I was like, sure, let's make another one. So I made a second podcast just for fun. And those are the other videos you'll see there. It's called Pursuing Greatness.
So you've got, awesome. The channel's got all different tiles on it, and the tiles are color coded. Yep. So there's color coded tiles for real estate investing. And then there's color coded tiles for the spiritual side and the, empowering side, and then there's also, I think, green tiles for the marketing side. Is that correct?
Yeah. So I, as I mentioned, I created the e-commerce business a while ago, and then I was taking on clients for digital marketing. So I got some pretty good digital marketing chops, and so I just started sharing that knowledge on there too. I haven't been doing that as much because my focus has been more on real estate, but those videos are on there. Those will be green.
So where are you sourcing your content? I blew through a bunch of the videos. I thought they were great. They were concise. They were to the point, easy to digest. Where are you sourcing all the content for this stuff?
Well, how do I come up with the topic, you mean?
Yeah.
So that's SEMrush. I just want to answer questions that people are actually asking. And so I just Google I search what people are asking, and then I answer those questions if I have, the answer in my brain.
So that's a neat little tip, folks, for those of you that are looking to bolster your SEO. You can go in, and this is what we've done. And I think one of our videos ended up being Pete, where was our video on HUD? It was like way up there, right?
Yeah, it was.
It was a #1 video on YouTube for a while. We did the same thing. So if you have a business, folks, you can go in and ask Google, basically, what are people asking in relation to your business? And it'll spit out all sorts of questions that you're probably going to be an expert on some of those topics. So we started hammering out blogs and turning some of those blogs into videos. It was killer for our SEO. It really helped us soar through the rankings, and it became a great informational source or a resource for the community to pop in and check it out.
Yep. Yeah, and if you use something, what's it called? Zoom is a good one because you can always just share your screen. But I use StreamYard. That's this new program I'm testing out. And it's really easy to share share content, create something yourself. And it also Zoom is it's good, but it's kind of like grainy. And this one goes up to 1080p. So it's a good one to check out if you're trying to create content for your business.
Now, are you producing all of this yourself? Do you have a crew, or are you doing the editing? What's your shop set up like?
So just VAs. I have 2 VAs that help me with all the back end digital stuff. So I do the podcasts, and then I got the processes set up for them, and they run the post production.
Wow.
So VAs, virtual assistants.
Yeah. Yep.
Wow. That's really cool because your channel is tight, man. It looks professional. It really comes off well. So you actually have someone remote set up that's doing all the ground and pound for you.
Yeah. I mean, I created a whole system for the thing so they can, it's easy for them. It's kind of hard if you just give people an idea, or VAs specifically. Not that I use VA so loosely. It's, someone who is helping you that is not, local. But I created an entire process for them to kind of help it out and get them going down the right path.
If you don't mind me asking, was this like through a third-party company, or are these people you knew that you had a prior relationship with, or?
No, this is from through Upwork. Yeah, Upwork's a really good one.
Both starting to write it down.
No, like I've got notes everywhere.
I know.
Yeah, Upwork's a great one. Fiverr is good for small things, in my opinion. It's not really good to find a full-time VA, but Upwork, I mean, the system's set up well. You can do interviews. I highly recommend interviewing people before you hire them, because you can land on some duds out there. But once you get a good one, then it's great, and you got to treat them well, give them plenty of bonuses, and they'll help you out.
How's the on the costing side? Is it expensive? Is it reasonable? Is it akin to having?
No, it's very reasonable for just the plain admin stuff. We're what is it? So we range from $6.50 to $15 an hour.
Really?
Yeah. So it's super reasonable. They do a great job. And for the lower end, for the the $6.50 an hour, I give them bonuses to keep them. They live in the Philippines, and so it's the purchase price parity is a lot different between the two countries. So it helps them out.
It's amazing. Just again, for the listeners, that's invaluable stuff right there, folks. To be able to outsource this stuff for such a reasonable rate. Even the higher end of that scale is just barely pushing the minimum wage limits here in New York. But the key, it sounds like, to success is the structure, right? Having defined steps that they have to follow so that they're not kind of getting off into la la land.
Yep. I have everything super laid out, and then I also create videos for each step, and so I'll go through the process of doing production on a video on a episode myself. And I'll record it, and I'll be like this, I'll talk while I'm recording it, or while I'm doing the work. Like, this is what I'm doing now. This is what I'm doing now. And that just kind of gives them an understanding. Obviously, you're going to have some, they'll screw up a few times as they start to learn your process. But once you kind of have a working relationship, like, any other situation, things work. And so, yeah, it's been working out well.
Now, this might be a silly question, but do you work with one specific person? Or is it like a company and you get, 5 different people in rotation that are your assistant?
So yeah, on Upwork, you'll see 2 things. Sometimes it's just one person. For this one guy I work with for marketing and PR for the podcast, that he's just an individual. He's a freelancer. For the admin, doing post-production, that kind of stuff, it is a agency, quote unquote. So you'll have a main contact, kind of like an account manager, and that account manager will be the person that you're talking with the entire time. And then they work with their team. So whenever, he has a question, whenever they run into issues, he'll talk to me, and then, he'll talk with their team.
So is that part of your system now that you're imparting to people through the mentorship, is getting set up with these VAs? Is that part of what you're recommending?
Yeah, I think, my brain just kind of works with systems. And so I think any business, if you really want to make it something that you enjoy, you got to put systems in place. You got to have really tight, clean systems.
We would get along.
Yes, just thinking that. Oh gosh.
So systems that's my thing when it comes to building a business.
Okay, so I wonder, Bex, as we're talking here. So one of the big challenges, Gabe, in my industry is over the years, the industry has dramatically changed. It used to be when you wanted to find a broker, you wanted a deal maker, right? You wanted someone who understood the art of the deal, how to make a deal, how to work a deal, how to read a client. And while that's still very important, oh my God, I'm doing the Cuomo thing here. Did anyone else catch that? That I've been doing the Cuomo thing? Wow. Shout out to the Gov. So we found that as marketing became more relevant for realtors, and it wasn't so much just about being a deal maker, it was about marketing, right? It was about getting this product out, not just drop it in the MLS anymore. The more eyes that we can get on our product, the better the chances are that we're going to sell it. And then it becomes the presentation, right? How the quality of the marketing. So you have two really separate, distinct agent groups, at least in where we operate. You've got the slightly older generation that are killer deal makers, best of the best. We have some unbelievable deal makers in our company, but they're on the technical side, from technology perspective, they're a bit challenged. And then you've got the younger agents that don't have the experience, they don't have the wisdom, and they're not programmed like the traditional deal makers are, but they're unbelievable when it comes to the tech side. I wonder if, as part of our company growth, Reeves, if perhaps we start getting some of our top producers set up with these VAs, let them come in and focus on what they do best. Let them operate in their gift. Let them go make deals, and maybe get them set up so that they can learn that there's this other side of it out there that can help pick up the slack on the things that they really are not loving about the business.
Yeah, I think that's a great idea.
Yeah, so especially when it comes to marketing and tech stuff, it is so easy to get just sucked into that swamp of all the small things that you have to do to make it work. So, I mean, systematizing it, making it stupid proof is definitely help you out.
Without a doubt. So you're also an author. Is that correct?
We'll use that term loosely. I wrote a book that will help people get started in real estate investing. It is not a published book in the terms like you can't go to Barnes and Noble and find it on the shelves, but it's a book. It definitely can help you out, and it goes through the 4 steps, just like I was talking about, of finding a deal, financing that deal, adding the value, and then exiting correctly. And so, it's up on the website. We are actually just in the process of redoing it in a new format. So you will not be able to get it right now, but hopefully within the next week.
Well, that's great, man. We, Becca had helped me collaborate on, we just had a collaboration of 12 authors out here on Staten Island. We co-authored a book that was just released, and same thing. I'm like, I'm not an author, but you kind of are an author, right?
You are.
Yeah. I guess, I'm an author, but an
Amazon bestseller, which was really but it's neat. You've got the opportunity to share the knowledge and get it out there, and that's really good stuff. You clearly have a neat approach to everything that you're doing, and I have to say, I'm actually, while we're on the podcast, I'm thumbing through your spreadsheet, which is probably the single most valuable tool for someone who wants to start to play around in the business, and they don't have the background and they don't quite understand how a Proforma would work. Could you talk the audience through this spreadsheet and give instructions how they can find it? I've been doing this for 25 years. I think it is a great little cheat sheet. It even has instructions on fill this cell out. It's in C9, right? Here goes this. It's a really great tool.
Yeah. I think you're talking about the offer analysis Excel that you get. You can get it for free on the website, therealestateinvestingclub.com. You'll just be able to find the button in there. It's free. But it's an offer analysis Excel. It goes through I don't have it on my computer right now. I wish I did, but you know what I can do? I can just download it from the website. Look at that.
There you go.
It goes through the process of really from the perspective of a single family or a small multifamily deal. And so, okay. So now it's in my email. Sorry, I don't have it in front of me, so I can't
you're okay.
walk it through.
While you're looking it up, that's another thing that I feel like, especially in real estate, that's not something that you learn right off the bat, right? You learn how to sell. You don't learn how to come up with proformas and how is one done, and you don't even realize how often that you'll need it. So this is such an invaluable tool.
It is. It walks you through, folks. Basically, the seller name, obviously, it's got all the basic metrics, the address, the amount of bedrooms, and then it takes you through and it walks after repair value at a 10 cap, after repair value based on comps, your square footage, the cap rate, which we touched on already, your gross rent multiplier, cash on cash returns, which is another great tool and valuable tool when you're doing your analysis, your debt service coverage ratio. And it's got like a step-by-step, it says on the bottom, 1, add the square foot in cell number 9, 2, add the purchase price in cell number 13. For people that are challenged with technology, I'm one of them. Give me a deal and I'll give you a brilliant analysis. I'll give you insight. I'll tell you every which way this deal is coming and going. You need a spreadsheet, you got to call Reeves, because that's just, I was actually going through.
I love spreadsheets.
Oh, see, if Becca would show it to me this way, I would get it.
Oh, hush.
Yeah, I just got it pulled up. Yeah, so I mean, everything you just said. So the rehab, you can choose a maintenance, light, medium, heavy, and then there's an explanation on the right what each one of those rehab severities is. This is based on kind of Seattle pricing. So if you are, if whoever's listening, watching, if you guys decide to grab this quick analysis sheet, know that those numbers are not unique to your area. So you are going to want to find your numbers, but you can use it as just kind of a general guess on what your deal will look like.
So what motivated you to put this together?
Well, I mean, doing deals made me put it together.
So you're using
this is
it
kind
all
of
the time for your deals?
No. So when I first got started in single family, I made something like this that was much uglier. And I used that to kind of, to decide whether I should put an offer in on a property. And so it helped me a lot when I got started. And so I thought it would be a good tool for somebody who is also getting started and wants to know if a deal is actually a deal. So that's where it came from.
Well, I think it's a great little tool. One of many on the website, a lot of information, folks. Again,
and also the book is, you have great information in the book, but you can also get that information pretty much anywhere else on the internet. I'm not downplaying what I wrote, but it's not. I'm not blowing through. I'm not making my own standard here. But the bonuses that you get with the book, I feel like are actually very, very valuable. There's 7 of them, and I don't even remember what they are. But they are very valuable when it comes to creating an investing company and getting started in real estate investing.
Well, look, as far as whether it's unique to you or not, none of us in this gig are coming up with anything that's all that unique anymore, right? It's all about how we practice and implement different systems and what we can derive by improving on what the last person did, right? That's what it's all about.
Yep, absolutely.
We're moving along here. We're already 50 minutes into this thing, but before I let you jump, I just wanted to cover, we've seen a lot in the news about what's happening out in Seattle. You've probably seen a lot in the news about what's happening in New York. What's going on out there? Boots on the ground,
in terms of the market or in terms of like the chop kind of stuff that's been happening downtown?
Both.
So the market is still surprisingly strong. It's been strong for 10 years. It's just been going through the roof. Thank you, Jeff Bezos, for making Amazon. But it doesn't seem to be slowing that much. I just sold a duplex for much more than I thought I was ever going to sell it. And so, yeah, the market's great, and especially down in Tacoma. I think Tacoma was ranked as the best, don't quote me on this, but I think it was ranked as the best market in the United States.
Wow.
Seattle, double check that, but I'm pretty sure that's what it said. So Seattle's doing great. The market is great. Appreciation's still there, still very strong. In terms of the chop thing and all that craziness, honestly, I try to put my head in the sand when it comes to that kind of stuff. I just focus on the business, focus on doing what I need to do. And then, Seattle's a unique place. I love the city. I grew up here. I don't think I'll ever move permanently. But there's things going on. So we'll see how it all plays out once COVID leaves us with its presence.
Well, stay safe out there. Before you go, give us a prediction. Where's this market headed? Give us the next year or two in your market, of course.
Yeah, man. I wish I could give you a good prediction. I think for Seattle, I think we're still going to be going up. I think Seattle is going to be a strong market for a while. I just don't see it changing that much. In terms of the general market, the United States and our economy, I don't know. We'll see. I wish I could give you something really profound right now, but I do not know what will happen. We'll see. I don't think there's going to be some crazy crash, but you never know.
You think interest rates stay down?
I've talked to people much smarter than me about interest rates, and they say that the interest rates are going to be suppressed for a while. And so I'm just going to believe them because I'm not smart enough to know specifically whether it'll, go up or down.
Well, the Fed met and had their policy meetings last week. And it was interesting that I think the Fed now holds 30% of the mortgage-backed security market.
Oh, wow.
They've now purchased 30% of that market. And interestingly enough, from what they've said, they still have a very strong appetite for those securities. So I would suspect so long as the government is interested in buying, those notes, the banks will continue to play in these interest rates, or at least in this realm of these interest rates, and possibly lower. They're going to continue to tick it down until, the buyers say this isn't enough of a margin for us. So I think we're considering that we're on the heels of a global pandemic. I think that we're going to come out of this okay. It's going to take a little bit of time, but I believe that there's a spirit in this country that people want to get out. They want to get back. They want to go to a ball game. They want to get back to life. Yeah. And I really
think it, man. I'm right there with them.
Yeah, right. So I think when the veil lifts or the fog lifts, there's going to be a couple of years where it's, the roaring 20s. I really believe that people are going to be out there and celebrating life again. So
I've got that same hope. So I know, it's been a year since we've been inside. And so I know that once the veil lifts, it'll all go back to doing well. So I'm in the same boat.
All right, Reeves, did you have anything else for Gabe today?
No, I'd love to pick your brain further on the coaching stuff at some point, but we'll save that for another day.
All right.
Gabe, what's the best way or the easiest way for folks to find you and to reach out to you?
Yep. Best way is the website. It's therealestateinvestingclub.com. You can check out, there's tons of stuff there. You can get the ebook. It's in the upper right-hand corner. And then also you can click on About Gabe. In there, you can find my LinkedIn profile if you want to reach out to me personally.
All right, man. Perfect. I really appreciate your time today.
Absolutely. Thanks for having me on. It was good talking to you guys.
Yeah. Enjoy.
Thank you. You too.
Everyone out there, stay safe.